Traders, pay close attention. Fetch.ai is approaching two major levels, and the next reaction could decide the entire direction of this market. Let's break it down. Today we are taking a deep look at Fetch.ai, and when you examine the overall structure, you can clearly see that the market is currently in a downtrend direction. The price has been forming a consistent series of lower highs and lower lows, showing that sellers are still in control and the bearish momentum is active. This downtrend structure sets the tone, but as always, the most important part isn't the trend. It's the key levels where the market is likely to react next. If you draw your trend line connecting the recent highs, you'll notice that this trend line has been respected multiple times. Every time the market comes back to tap this trend line, it rejects strongly and pushes downward again. These repeated reactions make the trend line a very important level to watch. A well-respected trend line tells you exactly where sellers are stepping in and where momentum tends to shift. And that's not the only key zone on the chart. If you look below the current price, you will also see a clear support level, a price area where the market has previously reacted with strong bullish momentum. This zone has proven its strength before, which makes it another critical decision point. Together, the trend line and the support zone create a clean trading range, giving us two high probability areas to watch. Here's what we're expecting. If the price moves back into the trend line around the 0.25024 region and forms a strong bearish candlestick, such as a bearish engulfing or a long rejection wick, then that becomes our confirmation to look for a sell from the trend line back down toward the support level. This setup would align perfectly with the overall downtrend direction. But if the market does not respect the trend line and instead breaks above it with clear bullish strength, that changes the story. A break above the trend line signals that buyers may be gaining control. In that case, we wait patiently for the retest. If the retest forms a bullish candlestick, then we look for a buy opportunity from that level to the upside. Now let's look at the support level. If the market drops back into the support zone around 0.20 and forms a clean bullish candlestick, something showing buyer strength, then that becomes our confirmation to buy from that level upward. Support reactions in a downtrend can still offer strong counter-trend opportunities, especially when the level has proven itself multiple times. However, if the market fails to respect the support and instead breaks below it, that means the support has flipped into resistance. In that scenario, we wait for the retest of the broken support. Once the retest forms a bearish candlestick, we can then look for a sell opportunity in the direction of the trend. This is how we approach the market with discipline. We don't guess, we don't chase, and we don't act without confirmation. We let the key levels tell us the story. Trend lines and support zones represent market psychology, where traders enter, where traders exit, where liquidity sits, and where control shifts between buyers and sellers. In summary, Fetch.ai is currently in a downtrend, but the most important areas are the trend line above and the support level below. If price respects the trend line, we sell. If it breaks, we wait for the retest and buy. If it respects the support, we buy. If the support breaks, we wait for the retest and sell. Simple, clean, and based entirely on how price reacts at these key levels. All right, traders, that's the full breakdown on Fetch.ai. Stay patient and let the market show its hand. And I'll see you in the next analysis.